Hello everyone, this is the weekly market recap and this is Ahmed Saleh. So let's start by the key messages first. So if you don't want to wait till the end of the video, you can just take the key messages and leave. So first, we talked last time about that the only thing that can lift market up is that we have a good result, and actually we didn't have good result. 3 out of the Mag 7 results were bad and the market reacted negatively toward them. Next week is full of events. So we have the US election on Tuesday and we have the Fed meeting on Thursday. So we expect some volatility to be in the market. Last Thursday was a very bad day, one of the worst days that we have seen throughout the last few months. So most probably you are out. If you are putting a stop loss, then you should be out of most of your portfolio. Personally, I'm out of 90% of my portfolio. If not, then you should continue to offload your portfolio and don't be in with a margin in the coming week. Okay, these are the key messages. So we go first to the last week recap. Last week on the week 5 of October, we had a very bad day, as I mentioned, in Thursday, and this drive the week down and drive the whole month down. So we are closing the month between minus 0.5, minus 1, minus 1.5, minus 2. So it was a very bad week, and we ended October negatively, despite all the expectation because of rate cut, because of results. Unfortunately, October was a negative month. This was mainly driven by 3 of the Mag 7 results, like Microsoft, Meta, and Apple. They have beaten expectation, but as we always say, the results is not affecting the reaction of the market because that's already priced in. The expectation also is priced in, so the market was expecting that they are going to beat expectation, but they didn't beat it enough, and they give a negative guideline on the next quarters and the spend that they will have, especially for artificial intelligence. So the market reacted negatively toward the 3 companies. Only Google and Amazon were good, but they were not good enough to lift the market up. So overall, we closed October in the negative territory. We then go to what's next. We expect next week we have the US election on Tuesday, so full Tuesday we're gonna be very busy with that. And we have the Fed meeting also results on Thursday. Okay, and the week after we have the inflation report. So on the Fed meeting, if you go to the CME, the probabilities for the Fed, what is the Fed is going to do, we see that there is a 98.9%, so unanimous, that the Fed will cut rate by 25 basis points. So currently we are at 475 to 500, and the probability is that we are going to go to 450, 475, which is a 25 basis point cut, which is 0.25%. So there is a unanimous that we are going to cut the rate by 25 basis points. I don't expect the Fed will deviate from this, but if the Fed deviated, they will deviate toward maybe no cut, and if they did no cut, then the market will go down. Okay, but I don't expect that they are going to do that, or they are going to cut by 50%. They got a lot of negative comments because they cut 0.5% last time, and they said they are too early. So I don't think they will cut by 0.5%, that's for sure. And all the market is thinking that they are going to cut by 0.25%. So let's see what they are going to do, but they should be in line with this. Okay, so that's the first point. The second point is that we talked last time about the negative diversion. We call this the watchout signal 1. Just as a reminder, there is a higher top that we have seen in mid-June and mid-July. So this top is higher than this one. This top is higher than this one. But look what MACD is doing in the histogram. the histogram, this top is lower than this one, this top is lower than this one, so this is what we call a negative diversion. And look what happened after that. We had about 10% correction in July. The same is repeating right now. We have a top that is higher than this top and a top that is higher than the second top. So we have seen that the histogram is having a lower top. This top is lower than this one, and this top is lower than this one. And look what the market is doing right now. The market is behaving negatively. Even the rebound that we've seen on Friday was not really strong, and we lost all the gains that we have made. So things doesn't look good from a technical analysis point of view. All right, let's go to another watch out. We talked last time about four things in this slide. We talked that the number of new highs are getting lower and lower. So look at when we started this in like 20th of October, it was 876 new high, 79 new low. 79 companies doing new low, and the majority were doing new high every day. It went down from 876 to 400 to 300 to 100 to 200, 300, 300, and then now we're ending at about 150, 140. And look what's happening into the number of new low. They are increasing. So we started by 79 and we are now at 177, 282, 241. So they are increasing, which means the market is going down. We don't have new highs, we have new lows. So this is the first one. The second one is that the number of companies above the simple moving average 50 is getting down. So we started by 6,700 going to 5,200, 5,000, 5,000, and then now we are at 4,000, 4,100. So big gap between the start and now. And look what's happening to the companies below. They are increasing. Okay. Also, the third one is that the number of companies above the simple moving average 200 are getting down. We started by 6,700 and then we are going down to 6,200, 6,300, 6,100. Now we are below 6,000, 5,700. And the number of the companies below the simple moving average 200 is increasing. So this is a third negative sign. Fourth negative sign is that we have the simple moving average, the companies above the simple moving average 50 is lower than the companies above simple average 200. So it means that those companies will pull the simple moving average down and the market is going down. So we have here 4,100 and we have here 5,700. So the 50 is pulling the 200 down. Okay. So again, some negative signals that we need to watch for. So this is on the negative side. What is on the positive side? On the positive side, we had two things as well. The first thing is that normally November is the best month in the year, regardless if it is a year with the presidential election or not. It's normally throughout the last 10 years, we get 3.1%. So the history on our side. But look what on October, the history was saying 2.1 average return. We didn't get to 2.1 average return. Maybe because September was also not in line with the history. September we got 4% gain versus 2.2% loss on the last 10 years. We got 4.4% gain. So maybe this is why we had a negative October, plus the results, of course, and plus the volatility that we have seen because of the Middle East war and election and all the incidents that's going, results that's happening now. That's not good. So maybe now, because we had a negative October, maybe we'll get a positive November with 3.1%. That's the average. So let's see if we are going to get this 3.1%. So that's the first thing that is on our side, history. The second thing, again, is history. And this chart is saying that when the Fed cuts in a good economy, which call it no landing, normally there is 100% chance that after the cut by 3 months, we get 8.6% retain, and after 6 months we get 13.2%. So the Fed start cutting rates on mid-September. So we are now in the second month and going to the third month, and we should be up. Okay, it's happened 100% of the time that the Fed cut rates and the economy was good. Okay, if the Fed cut rates and there is a recession, then the market goes down. But when the Fed cut rates and there is a good economy like what we have today, the GDP was just announced and it's like it's 2.9%, so 2.8% is good. So when this happens, there is a 100% chance that history is on our side. Now we have two negative comments or negative events and two good events in our side, which is like, okay, what is going to happen? We have to watch and see. But things like you have to be reducing your position and getting out so that you are like not really if the market turned out to be red, especially that we are going through the election and we don't know what Trump is going to do if he lost. You remember last time he made a lot of fuss. He didn't agree to the results, and his supporters went into the Congress, and like there was a lot of mess at that time. And the market doesn't like when there is unclarity or where there is risk or there is volatility. That's why the market is reacting. But yet, if the election went fine, and then if the Fed is in line with the the probabilities that we have seen, maybe the market will stagnate. We have to have something good so that it raises the market. What is this good thing? We don't know because the results are now almost done. There are like few companies that are going to be announced next week and the week after. But the Mac 7, the 6 of the Mac 7 results are out. Only NVIDIA is going to announce still at the end of November. Okay. So let's watch out. Let's be careful and have a nice trade. Thank you very much.